Good day, traders. Stacey Burke from Stacey Burke Trading. Daily currency levels for the British pound crosses, Monday, June 15th. Quite a bit of news on the calendar this week. Nothing scheduled for today, but obviously the rest of the week we have quite a bit happening. And today we have nothing on the major news calendar. Looking at our pound Aussie first up, we have a pullback above the 82.50 level. At the beginning of the week, we've opened up just above that level. After reversing last week, we still have technically a downtrend. We have completed a full expansion, and we now have a micro trend line break. But this market still, if we just bring this a bit closer, has room to potentially retest the lows down at 80.56. Currently, we're above the 82.50 level, but if we were to break through that 82.50 level, we would probably most likely retest the lows from earlier in the month. Looking at our 4-hour chart, we can see we've had one push, two pushes, and then three pushes to a peak, which reversed on the engulfment at the end of the week last week. We've opened up above 82.50, currently pulling back. We have a bear pin and now possibly a stop hunt on traders that were short. Again, if the market was to break through the lows of Friday night, through that 82.50, 82.25 level, we could possibly revisit last week's lows and head down towards the 8,000 level. Looking at our 15-minute chart, we can see we were inside of a larger rectangle last week before having one push taking out the last highs before the low, and then two pushes, and then Thursday, Friday, a third push up with a 1, 2, 3 into the peak before reversing back inside of that rectangle and then pulling back above the 82.50 level today. Now again, we've had three pushes into the peak from the low of Friday night. If this market was to pull back inside and close below the 83.50 level, we could possibly retest the lows down at 82.50 as well as the lows of the day, stops underneath, and possibly the lows of Friday. Currently just auctioning back and forth around the 83.50 level. Again, if we were to pull back inside, we could retest the 83.50 for a move back down to the lows, or push higher and continue to move towards Friday's highs. Again, there are lows. If we were to break down back through the low of last week towards the 80.56 and 81.25 levels. Stops above Friday's high. Currently this 83.60, 83.50 level is important. If we hold below there, we should retest the lows of the day. If the market holds above, we should probably retest and move above the 8400 level. Next up is our pound Canadian. We had an engulfment on the close on Friday, closing below Thursday and Wednesday's lows, but holding above the 7,000 level. Currently inside of a larger rectangle underneath of that first full expansion outside of that breakout. That a 7,000 level still seems to be holding as support. If we were to break that, we would retest most likely the lows of last month down at 68.44. On our 4-hour chart, we can see that market's consolidated and had a brief breakout on Friday before pulling back, forming somewhat of an ascending triangle with a breakout pullback, still holding above 7,000. Again, if this market was to push through that level again and retest the highs of last week, we could possibly see this market start to move back up towards the 7,500 level. On our 15-minute chart, again, we can see that the market was inside of a larger rectangle, trying to make new highs before pulling back, making new highs and pulling back. When we zoom out, we can see that last low before the high has been violated on Friday, and we pulled back and went sideways, auctioning across that 70.50 level. Breaking down, we could retest 70.50 for a possible sell-off at that 70.50 level, as we head into the London Open and possibly retest the lows of Friday down below 7,000. If this market was to break above the highs of the day, 70.50 could act as support, and we could move up towards the 7,100 level. Next up is our pound Swiss. Again, on our daily chart, we can see we broke through the highs of April before pulling back and reversing. The market has come down 1, 2, 3 and consolidated. If this market was to break the lows, we could possibly be in the middle of a measured move for a range extension, taking out the lows of last month below 1.1728. So again, the 17.50 level could act as potential support. If we were to break through that, we could possibly head down towards the 1.500 level. On our 4-hour chart, we can see the head and shoulders reversal. Market traded down on Friday before pulling back into the close. A full measured move of this leg down could possibly take us down towards the 1760 level. This 1850 level is significant, 1875, but again we have stops below the lows back at the end of May below 1810, currently making this low of last week at 1837 is significant. If we were to break through that, we should probably continue to fall, but if we were finding support at the 1875 level, we could possibly see a breakthrough of the highs, the swing highs on Friday at 1978 for a move back up inside that upper rectangle. Currently, though, a full expansion of this head and shoulders neckline would take us down to around the 1760 level. On our 15-minute chart, we can see that market auction sideways into the close before breaking down and giving us a micro double top formation today. We've broken down below the 1900 level. Could possibly see a pullback to that level for a retest back towards the lows of the week below the 1840 level. Currently trading underneath after a breakdown this morning. So again, this 1900 level could become significant for resistance and possibly a retest and a move back through the lows of the week. Next up is our pound yen. Again, on our daily chart, we can see the market reversed off the 137.50 level before pulling back inside the highs of April. We have stops below the lows of May, but this breakout level just above the 133.18 level could act as potential support, the 132.50 to 133.18 area, for a possible reversal or consolidation for a breakout pullback. But currently we're back inside of that larger rectangle, and this market is continuing to make new lows. We've broken Friday's low and possibly could be in for a range expansion back towards the lows of last month. On our 4-hour chart, we can see this clearly similar to the pound Swiss. We have a full extension that would possibly take us down to the 132.50 level of this upper head and shoulders break of the neckline. We've had a pullback and retest on traders that were short, and then the continuation, we're breaking that low as we speak. So again, this current level at 33.79, if the market was to break through this, we should most likely fulfill at least down to 32.50, which is still 100 pips away. On our 15-minute chart, we can see, again, similar. The market gave us a peak formation on Friday before consolidating and then breaking through the lows of Friday's session. 133.50 has acted as temporary support. We may get a retest of this 00 level for a pullback continuation off the 00s. Again, this market is finding some support at 33.50. We may pull back and retest this breakout. If the market was to extend or find support, we could see some consolidation and a retest back towards the high of the day. Currently, though, this market is making new lows, and the 00s could act as potential resistance. Next up is our pound New Zealand. On our daily chart, we can see this market has found some support around the 94.20 9412 level from the lows of December, but it's currently auctioning sideways at the 9500 area. We're in a consolidation after a strong couple of months of movement downwards. Our 4-hour chart again clarifies this. We had a breakout pullback heading into the close on Friday below the 9500 level. So again, this market is pulled back and retesting 9500. We could revisit the peak of last week's high. Just put a marker on there. Up above the 96.36 level. But if we were to break down through the lows of 93.73, this market could continue to make new lows and possibly give us a range expansion. If we just zoom in a bit on this, there is room for this market to continue to move lower. We could possibly have a move down below the 9200 level and heading towards even the 9000 level. On our 15-minute chart, we can see that the market, we'll just scrunch this up a bit, was largely in a bigger rectangle for the last few days of the week, auctioning between that 95.75 level and the lows at 93.83. The market broke down on Friday before pulling back into today's session, but we have had 3 pushes up into that 9500 level, currently possibly rolling over to revisit the lows of the day. The 9500, again, significant round numbers and maybe acting as potential resistance. If the market was to break the lows, we could revisit the lows of the day, which is down at the 93.75 level. Currently trading off of 9500, off the highs of the day, and we may revisit the lows of Asia and head towards 94.50. And lastly, our British pound. Again, market just broke through the 2500 level on a 1, 2, 3, breaking through support levels. We have a breakout from at the end of the month in May at the 2400 level. Currently, we're trading at 2460, so we're 60 pips away from filling that gap. This market could continue to head down towards the 2250 level. Again, we can see that breakout clear, and similar to the pound yen and pound Swiss. So we'll get rid of this. We may have a measured move in progress from one full expansion taking us down towards the 2230 level, and a second full expansion would take us below the towards the 2250 area if this market was to continue to move lower. On our 15-minute chart, we can see the market has clearly made a breakout after 1 push, 2 push, and then a 1, 2, 3 engulfment off the high of the Asian session for a breakdown below 2500. Again, these double zeros may act as significant resistance. We could possibly retest the 2500 level before rolling over and revisiting the lows of the day. If the market was to continue to extend out and make new lows, we could have a stop hunt back up inside. But currently we've broken the lows of Friday. If this market pulls back inside, could still have a measured move in progress that could potentially take us down towards the 2400 level. Again, we've had a breakout, and we may, into the London Open, see a stop hunt back up towards the 2500 00 level. Just closing on a quote from Ray Dalio. Everyone has at least one big thing that stands in the way of their success. Find yours and deal with it. Stay disciplined, traders. Stay focused. Focus on getting 1% better each day. Have a great trading session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets. And this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.